Hey everyone, it's Matt Donaghue with Mission Financial Planners. Wow, what a week, huh? I am recording this today. I know normally we send out our stuff early in the week, but we're doing a Friday update because there's been a lot of volatility this week. And I wanted to take some time and make sure people understand that we are really watching this closely and that we'd already made some proactive moves through our partners at Kestra Investment Management to really help. Offset some of the volatility that what you're seeing now. So let's just break it down a little bit. This piece that I'm sharing with you, we're going to send this out in an email to everyone today. If you are watching this on YouTube or something like that and you're not on our email list, just let me know. You can always contact us at admin, ADMIN, at mfplanners.com. That stands for missionfinancialplanners.com, not what you're thinking of, but admin at mfplanners.com. You can always give us a call too at 888-339-0093. Once again, 888-339-0093. So let's jump into it though. Just a couple days ago, April 2nd, feels like it was a long time ago already, the White House announced a new sweeping baseline tariff on nearly all imported goods. It's a big change in trade policy. It's got a couple of goals, right? Which include reducing the deficit, boosting American manufacturing, but then also lowering our dependence on foreign supply chains. Markets reacted negatively. And while the headlines were sharp, our response wasn't. We had already built it into the plan. So thanks to our partnership with Kestra Investment Management, the team led by Kara Murphy, had already made strategic adjustments to the portfolios we're using to account for volatility, inflation pressure, and a potential economic slowing. So here's a quick breakdown of the key changes that were implemented. You'll see those right here on the piece that we're going to send out to everybody. But the key changes: one, a reduced exposure to U.S. large cap growth stocks. Valuations had been stretched. We had talked with a lot of you about that, about, hey, how long can stuff stay so highly priced? So there had already been a reduced exposure to U.S. large cap stocks. There was an increased allocation to U.S. value stocks in international developed markets. Those are offering better valuations, which means a little lower valuations currently, which means there's room to grow. That also means that there's better downside resilience because they're not tied directly to either growth stocks or the US market. We also, or I should say, Kestra Investment Management also added some mid-cap positions while reducing small cap exposure. Small caps are going to be much more affected by this, right? The small companies that are trying to grow, it's going to be harder for them to grow in the short term. So given mid-cap, so medium-sized companies, better financials, lower volatility, it made sense to make that move. And that's just on the stock side of the house. On the bond side of the house, or the fixed income side of the house, income exposure was shifted away from intermediate and long duration treasuries to shorter duration, high quality corporates and mortgages. You know, one of the things about some of the corporate bonds that are out there today and some of the mortgage rates, as we've heard in the news continually for the last couple of years, rates are high, right? But they're stable, low default rates, high quality corporates. They're going to give you a higher return than some of the treasuries will. There's also an allocation that was increased to managed fixed income funds. That provides greater flexibility in navigating market volatility. What's happening there is Kestra Investment Management is selecting the fund. The fund manager then is going in and making adjustments as they see fit to make sure that they're navigating and hopefully reducing that volatility, but then also capturing some attractive yields. Now, all these moves, this isn't a knee-jerk reaction. Okay, this isn't a knee-jerk reaction at all. These are based on long-term risk management and a commitment to disciplined, diverse investing. Market pullbacks are part of the journey. It's part of the path that we're all on. In fact, history shows that some of the strongest market recoveries actually occur right after the worst down days. And so that's why staying invested is the most reliable strategy for long-term growth. And you can see some of those here. Again, we're going to send this out in an email to everyone as well. And if you're doubting the future of stocks and so on, and you're thinking, oh my gosh, I'm just going to go into bonds or gold or something like that, you know, well, you can certainly have a bond allocation or a gold allocation to help smooth out the ride even more. Keep in mind, moving whole hog into something like that is not a good idea in the long run either. You can see here, going back to 1802 when the US stock market opened, right? Going back 222 years. If you would have invested in stocks, bonds, bills, gold, or just the US dollar, well, stocks are the clear winner. You can see that on the screen in front of you. Again, we're going to send this out to everybody as well. But if you do have questions on how this shift in trade policy is going to impact your financial plan and your goals, keep in mind, we build diversified financial plans that don't just center around investments. We look at income planning, we look at investment management, we look at insurance planning, we also look at tax planning, and then on top of that, we also craft estate plans as well. So when we're looking at all 5 areas, this is one part of it. It shouldn't be derailing your plan. If you feel like it is or you're concerned, please give us a call, 888-339-0093. We'll be reaching out to a lot of you as well. But again, give us a call, 888-339-0093. We're standing by. We're ready and happy to talk with everyone. So stay disciplined, stay invested, maybe turn the TV off, maybe put your phone down, right? But just stay disciplined, stay invested, and stay in touch. We'll talk to you soon. Have a great weekend. If I don't talk to some of you before Monday, you will also see our Monday market or our Monday weekly market update coming out as well. But thanks again, everyone. And we will talk to you all soon. Once again, if you have any questions, call us, 888-339-0093. Thank you.